make money on anything you purchase. Did you know that there is a way to make money on anything you purchase? You might ask how, and that secret sauce is infinite banking. Hi, my name is Sunny Mitra, founder of Bright Horizon Wealth. We teach entrepreneurs and go-getters like you how to own their financial future with the concept of infinite banking. If you are new here, please subscribe to our YouTube channel and hit the notification bell so that you are notified when we upload new videos. Today you will learn how to make money on anything you purchase, but we'll focus specifically on buying a car because most of us have one. Our money maker today is Sue, a 26-year-old female who is in good health. Anyone can use infinite banking at any age, but we'll use Sue as our example because she has many years left before retirement. As you can see, she is depositing $10,000 a year for 10 years. Then she stops putting any more money into it. Now, let's go to the 8th year and do the math. At 33 years old, Sue has a cash value of $71,524 in her account. How did that happen? Well, she deposited $80,000 into it for 8 years, and she has also made $30,000 worth of car payment to herself over 5 years. The sum total of $80,000 and $30,000 is $110,000. Now she buys a car for $25,000. After subtracting $25,000 from $110,000, her remaining balance is $85,000. This $85,000 is her out-of-pocket expense. As mentioned, by the 8th year, she has $71,524 in her personal family bank account column. If you divide $71,524 by $85,000, you get 0.84. What that means is she received 84 cents back on every dollar after purchasing the car. How many of you have ever made money on your car purchase? How did Sue do it here? It's simple. 500 times 0.84 equals $420 a month. Now let's look at second car purchase. Sue invests $1 and gets $1.07 back on every dollar after purchasing the car. What that means is out of $500, she is making $535 back every month, which is pretty good. By the 14th year, she has $139,763 available in her PFB, which stands for Personal Family Bank. On her third car, it gets even better. She makes $1.58 on every dollar, which means that for every $500 that she pays on her car loan, she gets back $790. By now, she has $213,777 available in her PFB account. By the time she gets to the 7th car in the policy year 44, what happens? The debit and credit ratio explode. For every dollar that goes out, she recaptures $5.78. In other words, if she puts $500 a month, she gets back $2,890. Her PFB, that is Personal Family Bank account cash value at that point is a whopping $780,103, and she got to keep all 7 cars and their titles in her possession. Plus, she has a death benefit of $1.6 million. She is in fine shape now. Look at this way. Sue has financed a total of 7 cars over a 44-year period. That is $100,000 out-of-pocket expense and $210,000 in loans for 7 years, for a total of $310,000. The cost of 7 cars at $25,000 a piece is $175,000. If you deduct $175,000 from $310,000, you have a net cost of $135,000. That same year, when Sue is 69 years old, her account has a cash value growth of $780,103. The total profit is cash value minus net cost. So 135,000 from 780,000 is $645,103. That is the pure profit this account has generated so far. But wait, it's not over yet. In fact, from here it gets really juicy. So let's say you follow Sue's example and drive all those new cars throughout the years. Once you turn 74 years old, what about your retirement income? Do you want this policy to supplement that too? If your answer is yes, then you can get an additional $75,000 a year tax-free for the next 11 years. In fact, you can start this income before age 74 if you like, because it's a policy loan. You don't pay taxes on it. The best part of it is that even after taking out $75,000 for 11 years, a total of $825,000, you have still got $502,620 left in your personal family bank account by your 84th birthday. If we add both of those numbers together, that account made you a total of $1.3 million. And let's not forget death benefit of $1 million. How terrific would that be, in addition to the $1.3 million the account made in total? You might ask, how is it possible? Well, it can only happen inside a dividend paying whole life policy in a compound interest environment. The two main reasons it multiplies like this are compound interest and tax deferred growth. So again, remember, regardless if you are going to buy a high ticket item, or if you have any debts now, or you are planning for your retirement income, we can help you create a plan where you can pay for it in the future. And we direct you towards the right direction by uncovering your main reason as to why you should even consider getting started with Infinite Banking. We'll provide you with a roadmap for your financial future. If you like this video, let us know by liking it and leaving a comment for us. Make sure you share with your friends and family and subscribe to our channel. And remember, own your tomorrow by converting liabilities into assets.